I guess what people are also going to be curious about is what do you think the likelihood is that we go to some sort of digital currency?
Well, I mean, isn't the credit card system effectively a digital currency?
Yeah.
PayPal and Venmo, like,
That's what I believe. When you work at a bank, that's what you realize is that all it is numbers to begin with. I think maybe what some people are concerned about is a complete removal of the physical cash.
yeah, the
Do
banned
you think that?
cash.
Yeah.
That's the next step. And I've always I when I was younger and more naive, I actually liked the idea of a post-cash society because I thought it was
Yeah.
convenient to carry around cash. Because I remember a time that just in my childhood when credit cards and debit cards were not really a thing. I remember like when I was in high school that I got my first debit card and it was kind of like a big deal.
Yeah.
Showing my age a little bit, but now it's all digital. And the thing though, if they ban the main problem with that isn't necessarily that you can't hold cash or that you're gonna have to pay taxes. Because I mean, a lot of people if you get paid taxes as a functional person in society, and if you don't like it, change the tax policy. But the thing is, the bigger problem is that I think is financial repression. I don't know if you're familiar with that concept.
No, I think those two words I could probably gather some sort of idea though.
It's the idea that the government deliberately lowers the return on capital to achieve a political goal. I think we had financial repression in this country from 2008 to 2020, effectively, when you held the
Yeah.
rate at zero and you
Yeah.
couldn't have any interest rate, yet inflation was much higher than that.
Yeah.
Even if you use the government's numbers, it averaged probably about 1.5 to 2. So you were just basically by having your money in the bank losing 2% of your net worth every year.
Yeah.
That's classic financial repression. It's usually used to pay down debt in real terms because it's hard to pay it in nominal terms because wages are sticky, which is why inflation is used as the political solution more than austerity because people don't really accept pay cuts very kindly.
Yeah.
Whereas you just print enough money, they're getting their pay cut and they're just too ignorant to realize it.
Yes,
But
absolutely.
but a lot of Asian countries developed this way. They basically let inflation run hot, but they put a hectic cap on interest and had capital and or had capital controls and said like, look, inflation's 6%, you're gonna get 2 in the bank. And if you don't leave, you have really no choice
Right.
in it.
Right.
That's financial repression. And that is usually a common strategy for either countries who are trying to develop and need to take a larger portion of capital away from the private sector into the public sector, or for heavily indebted countries to pay off their debts. Currency is the easiest way to enact financial repression at the more extreme level. So say if you have a digital currency and you cannot pull it out of the banking system, and I mean, even if a digital currency, you could theoretically buy gold bars, but it could be a way out. But let's
And
just say
and
that they don't allow that either. And you can't really have any, or you have to be in the stock market or the bond market or something. Well, theoretically, if you had a closed system and I think this would require international capital controls unless if every major country cooperated on it, which is a possibility. Like you had a point for most of 2010s, the BOJ, the Fed, the Bank of England, the Bank of Canada, and the ECB all have rates at zero. So and QE. So there is actually a possibility of synchronized cooperation, but you say the world sets all these major central banks, and let's say the PBOC, which is the China central bank, joins the two. They all set rates at zero. If there's a completely closed system, they ban all cash around the world. You cannot use cash in any major developed economy, and there's really no way out. They can do is instead of setting rates to zero like they did last time, they could set rates to -5%. This is the issue with it. They're like, look, we're just going to take 5% of your nominal wealth every year, call it a wealth tax, or
mhm.
just like, look, the economy's not growing fast enough. We need to stimulate spending. So we're going to punish you for saving. That's the main risk, I think, with digital currency is if you have a closed system. And what's to stop them from everybody setting the interest rate at -5%?
All
Or
right.
they could even do is they can look at your tax return and say, hey, look, if you make more than 400,000 a year, if your balance, like this is what I think they did was when Switzerland had negative rates. If your cash balance is say more than $100,000, in your bank account or across all of your bank accounts, we're going to charge you minus 2% because you're not doing your job of supporting economic growth. You're not spending.
Right. And I guess what I just want to interject for just a moment is that I want people to know actually how. So I was actually a part of a run on the bank during the pandemic. So I saw how people were coming in. And what a lot of people think is if you have $200,000, your $200,000 is in a vault in the back of the bank, which is not true.
About like $20,000, right?
Yeah, it's whatever our total balance is, then you have some sort of percentage of it to be able to cover. And then
about 10%.
10%, I believe. Yeah.
Yeah.
And so what happened is when so many people came originally as a bank, we weren't prepared to think, well, we're about to shut down everything. And so when people wanted their 20,000 or whatever, we gave it to them. But by the end of the day, we were literally having to tell people, we can give you 1,000 and it's just going to be $5, $1 bills. And we had to close early because we basically just had a little bit of ones and fives. So we had to have some sort of cash in the branch. So I think that in certain ways, we don't already have what it is that you're discussing now, but in certain ways, that is kind of a thing. Like if you don't have a branch or a bank near you and you need cash and you don't have cash, you're going to go to a branch and have to pay a percentage to be able to get the cash out, some sort of fee. So
let's say I had $100,000 in the bank and I wanted to pull it out to put it in my vault, like at home, or use it to buy or something, or like a car.
Yeah.
I couldn't do that.
I don't know. What you would need to do most likely is you would have to call ahead. You're going to have to wait until we get a cash shipment in. Then we're going to have to do what's called a CTR, currency transaction report on you. And then we're going to be able to give you the 100,000. But the process you're going to have to go through, you can't just be like, hey, I need 100,000. The way that banks kind of combat that is doing a cashier's check so that you can go buy the goods that you want to. But to just get your $100,000 in cash, be prepared for a 45-minute debacle. And an interesting thing is, which I think is a concern for going digital or entirely digital, is that, I live in Texas. So our grid is about as garbage as it can get.
California's?
I think they both probably suck. But, if we have a winter storm, which is just 30 degrees and a little bit of rain, our grid is going to go down. And so I've been a part of, having our grid down for 4 days, and certain restaurants were able to open if you could walk in the snow, and all they could accept were cash. So if you didn't have cash, you weren't eating, which was kind of like my first experience of some sort of physical, tangible something is still important, because I think we haven't invested in infrastructure really as America. And so I believe what makes it think, or if we can't even handle these, what makes us think that we're going to just invest everything into a digital currency?
Yeah, it's also a right to privacy issue too, with a lot of cash transactions. Like, do you want your banker to know, you know this, you work at the bank, you can see every person's transaction that they spend on. People want,
and they have certain things set in place, but if you don't have like a moral standard and you're curious, you could go through those quite easily. I think a lot of in a certain way, I guess, to defend like banking also, it's that I think it's 95% of all money laundering is done through the three big banks in America, which is Bank of America, Wells Fargo, and Chase. And I remember reading a report that was done that if you got rid of the $100 and the $100 bill and the $50 bill, you get rid of 65% of money laundering, which is quite interesting. If you had a $20 bill, the biggest. But the reason that I mention that is just to say that it is our duty as a banker to be more cautious, which also decreases your lack of privacy. So that is this kind of back and forth thing.
Yeah. So but I think the main issue I have with it is the issue of the financial repression.
Yeah. I agree. And privacy. I think both of those are incredibly important. I think it's weird. We're kind of just handing over.
I mean, with the age of social media, a lot of people voluntarily give up their privacy.
I think absolutely you're right. But I think that there's ways that you could go around that. I think that you could monetize a platform talking about value and not just sharing every aspect of your life, but I guess that just depends on your personal preference.
Yeah. So how do you want to connect this conversation about the dollar and the risk of financial repression and all this to the fact that you're seeing a lot of Gen Zers just opt out of the workforce?
Absolutely. I'm going to have you on my channel. I'm going to discuss really like 4 or 5 of the biggest reasons why I believe people don't really want to work anymore. I think it's such a complex topic. I think we can't address everything, but I want to go into a very in-depth kind of conversation about it. And I believe that this will probably go out at the same time you post yours. So
yeah, for those who want to watch that, go to Damon's channel. There'll be a link in the description.
Yes, thank you very much for having me on. I really believe that you provide a lot of value on your channel, so I'm very excited to be a part of this.
Yeah, same here. You're more on the personal finance level, whereas I'm more on the macro finance level.
And I would say even maybe a little bit more behavioral finance is kind of what I like to talk about. So it is interesting to see what it is that you're talking about, but my frame of reference is just a little bit different. But ultimately, we're kind of talking about the same things.
All right.